Welcome to Iron Financial. This is where we forge stronger portfolios by stress testing the market's weakest links. Look, we don't follow the noise. We follow the numbers, plain and simple. And today, we're putting Argan, that's ticker AGX, right under the microscope. Now, this company isn't just a stock, it's a paradox. It's a riddle, and it's wrapped in a blockbuster earnings report. I mean, on the surface, it looks like a flawless diamond. But the market is treating it like a ticking time bomb. So our job today is to crack that code and find out exactly what we're looking at. Let's get to work. Okay, hang on. Let's just stop right here. Because this is the entire story in a nutshell. I mean, look at this. On one side, you have the bulls popping champagne. They're pointing to a report that looks absolutely flawless. You've got record profits, a balance sheet that's built like a bunker, and a project backlog that stretches out to the horizon. I mean, it is the perfect story. But then you look at the other side. The bears are crashing the party, the stock gets hammered, insiders are bailing out like the ship is sinking, and Wall Street is just kind of whispering warnings from the corner. So what gives? This isn't just some paradox. This is a battle for the soul of this company. Is this all hype, or is it real? You know, that's the billion-dollar question, isn't it? And right here, this is how we're going to answer it. This is our blueprint for today. First, we're going to dissect that paradox head on. Then, I'm going to build the bull case brick by solid steel brick, starting with their absolutely record-breaking profits. After that, we'll look at their blueprint for, frankly, future domination. Then, and only then, I'll unleash the bears to find any cracks in that foundation. We'll follow the money, and we'll see exactly why insiders seem to be running for the exits. And finally, we deliver the iron verdict. Let's get to it. All right. Forget the noise for a minute. Forget the market sentiment. Forget what some analyst in a corner office thinks. Let's just talk about the numbers. Because at the end of the day, that is the only truth in this business. Financial performance is the bedrock, the foundation of everything. And Argan's numbers, well, they're telling a story of raw, unadulterated power. So we're going to peel back every single layer of this report and see what's really driving this machine. You have to understand this isn't just a beat. This is a knockout punch. Argan didn't just exceed Wall Street's expectations. They completely shattered them. We're talking about a 74% upside surprise. Think about that. In a market where companies get absolutely crucified for missing by a single penny, Argan basically just walked into Wall Street's office, threw all their spreadsheets and models in the trash, and said, "You're fired." This is not a company that's playing by the market's rules. It's a company that is making its own. This was a statement. And that knockout quarter? It wasn't some one-night stand. It was the culmination of a year-long love affair with profits. A 62% jump in full-year net income. That right there, that is the kind of explosive bottom-line growth that makes professional investors weak in the knees. It proves beyond a shadow of a doubt that Q4 wasn't just a fluke. No, it was an acceleration. This company is a well-oiled machine, and this number shows us it's just now hitting the throttle. Now look, it's not just about making money. It's about making money smart. And this right here, this is the proof in the pudding. A 25% gross margin in the construction and engineering industry, that is like finding a unicorn in a hurricane. It's almost unheard of. It means they're not just building things, they're building them better, faster, and cheaper than anybody else in the game. They are managing their costs with ruthless efficiency, and more importantly, they have the power to name their price. This company is playing in a league of its own. Okay, let's put all the pieces on the table. This isn't just an engine room, it's a rocket ship. And every single metric you're looking at is pointing to the moon. Yeah, revenue growth is solid, sure, but the real story here is the operating leverage. Gross profit for the entire year is up almost 40%. Net income, as we just saw, is up a staggering 62%. And check out EBITDA, up 43%. Now, for anyone wondering, EBITDA gives us a much cleaner picture of the core operational profitability by stripping out all the accounting and financing decisions. It's the pure cash-generating power of the business, and it's absolutely exploding. This company isn't just growing, it's taking its investors along for the ride into orbit. So the engine is roaring. We've established that. But what about the road ahead, right? Past performance is history. As investors, we buy the future. And that's exactly where the backlog comes in. You see, Argan's report wasn't just a report card. It was a treasure map. It lays out exactly where this company is headed for the next several years. So let's follow that map. This number, I want you to burn this number into your memory. $2.9 billion. This isn't a sales pipeline or some hopeful, rosy forecast. This is a promise. It's contracted revenue, it's signed, it's secured, it's already locked in for years to come. Now, for a company that did under $1 billion in revenue last year, this provides a level of visibility that most CEOs can only dream about. This is the kind of security that lets you sleep at night. This is a company that's built to last. And this isn't just simple growth. This is a supernova. The backlog is expanding at a rate that seems to defy gravity. I mean, look at this chart. From 800 million just 2 years ago to nearly 3 billion today. The demand for what Argan does, which is building critical power infrastructure, it has hit a massive inflection point. This chart is proof positive that Argan isn't just winning in its industry, it is absolutely unequivocally dominating it. So where is all this demand coming from? You gotta understand, this isn't just about building power plants. This is about building the future. 77% of that backlog is in natural gas facilities. So why is that? Well, because the modern world is absolutely starving for energy. AI, data centers, the electrification of everything, these are the mega trends that are shaping the next decade. And Argan Inc is sitting right at the heart of it all, building the reliable, 24/7 power grid that makes our digital lives possible. And here it is, the final nail in the coffin for the bears. This isn't just a balance sheet, it's a war chest. We're talking nearly $1 billion in cash and investments. And maybe the most beautiful number on this entire page, 0 debt. I'll say it again, 0 debt. This kind of financial firepower gives them total and complete flexibility. They can fund any project they want, they can weather any economic storm, and on top of all that, they're rewarding shareholders with a dividend hike and a massive buyback. This is a predator, not prey, and it's ready to pounce. Okay, the bulls have had their say, and I'll admit that is a compelling story. It sounds perfect, almost a little too perfect. Because if this company is such an impenetrable fortress, why is the market treating it like it's a condemned building? It's time for me to put on my black hat. It's time to take a sledgehammer to this shiny facade and find the skeletons in the closet. Let's see what they're hiding. So let's start here. The market has spoken and it is screaming sell. A 6% drop on a so-called blockbuster report with heavy volume? Come on, that's not a red flag, that's a 5-alarm fire. It tells you that institutional investors, the smart money, read that exact same report we just saw and sprinted for the exits. They aren't buying the hype, they're selling the news, and we absolutely need to know why. And you know what? It's not just the traders. Wall Street is supposed to be the home of the bulls, right? But right now, they're acting like scared kittens. A hold rating after a 74% earnings beat is a complete joke. Let's be honest, it's a thinly veiled sell signal. And what's worse is that their price targets are below where the stock is currently trading. The professionals are telling their biggest clients, this thing is overvalued, get out now while you still can. Look, this isn't just caution, this is a full-blown retreat. You've got twice as many analysts saying hold as are saying buy. You've got downgrades from major research firms, and what's their justification? Well, you have to dig into the footnotes, but you find it, that tiny little revenue miss. Now, it might seem small, but to Wall Street, it's a crack in the armor. It signals that this massive backlog might not be converting into actual sales as fast as they had modeled. It introduces uncertainty. And in this market, uncertainty is a death sentence. Perfection is the only thing that gets rewarded. But let's forget the traders and the talking heads on Wall Street for a minute. Let's talk about the people who really know what's going on. The ones with a seat at the table. The insiders who know this company's deepest, darkest secrets. See, they put their money where their mouth is. And lately, their money says they've been selling. Big time. This is where the story gets really interesting. And I want to be clear, these aren't just token sales for tax planning or something like that. These are betrayals. We're talking about a company director, Cynthia Flanders, dumping over 40% of her holdings for $7 million. Another director, William Limecooler, cashing out $4 million. These are the people tasked with leading the company into its supposedly glorious future. And they are abandoning ship just weeks before this amazing report comes out. They're cashing out while the getting's good. I mean, what does that tell you? And, it wasn't just them. Let's zoom out for the full picture. Nearly $20 million. That's the value of shares unloaded by insiders in just the last 3 months. So while they were telling the public that everything was great, that the backlog was growing to the moon, they were secretly, systematically selling off their own shares. This isn't just a contradiction, it's a deception. So it all comes down to this one question. This is the bottom line. If the ship is so seaworthy, why is the captain jumping overboard? It is the one question that every single investor needs to be asking themselves right now. And the answer to that question could be the difference between a massive windfall and a complete wipeout. The battle is over. All the evidence is in. We've heard the strong case from the bulls, we've heard the serious warnings from the bears. And now it's time for the iron verdict. Is Argan a golden opportunity forged in solid steel? Or is it a fool's gold trap just waiting to spring? Let's settle this right now. The bull case is simple, really. This company is a beast. The fundamentals are absolutely bulletproof. You have record-breaking profits, a gargantuan backlog that guarantees revenue for years, a pristine, debt-free balance sheet, and it's riding the biggest wave of technological change in a generation. From a pure numbers perspective, this isn't just a company, it's a juggernaut. The blueprint is solid. But the bears are circling, and you absolutely cannot ignore them. The market itself is skeptical, Wall Street is hedging its bets, and the insiders, the architects of this whole thing, they're cashing out. That revenue miss might seem like a small crack, but small cracks can become gaping wounds when they're put under pressure. These are not just whispers, these are warning sirens, and they suggest that while the company itself might be strong, the stock is priced for a level of perfection that it just can't seem to deliver. So what's the iron verdict? Argan is a tale of two stocks. It's a fundamentally sound company that's trapped inside a short-term crisis of confidence. The numbers, the balance sheet, the backlog, they are all made of steel. They are simply undeniable. But the sentiment is toxic. The fear is real and it's incredibly powerful. And you can be 100% right on the fundamentals and still lose your shirt if the market decides to panic. So the ultimate question is this: which narrative is going to win? Do you trust the numbers on the page, or do you trust the fear in the market? The choice is yours, but choose wisely, because in this game, there is no room for error.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.